Hey traders, a very warm welcome to you. So I want to talk a little bit about market sentiment. Market sentiment is basically where there are companies out there who will take the perception of a stock, a market, a commodity, an industry, whatever it may be, of different retail traders, take whether they're bullish or bearish, take each trader's perception of it, aggregate that data and present it to us and say, hey, this is the sentiment of that stock or that market, whatever it may be. Now, a couple of places I get it from. One of those is Stock Twits. If you go to Google, you type in Stock Twits, all one word, it's going to be the first thing that comes up here. Here you can see kind of the sentiment of US stocks mostly and some kind of indices and commodities and stuff like that. You type in the ticker of what you want and you're going to get an indication of bullish or bearish. In this case, we've got S&P 500 and it says 73% of those people are bearish. I can also put in stocks, I can put in Facebook. Again, I can come to sentiment. I can say, okay, 83% of people are bullish, 17% are bearish. Okay, interesting. Another another website I can use is dailyfx.com. So dailyfx.com, and here they're displaying the kind of sentiment of people in a specific broker as to whether they're long or short. It's showing as well how they're positioned and how people are perceiving it. And you can look here, S&P 500, it says here 79% of people are short, and that kind of matches up with our S&P 500 SPX sentiment here. 73% of people are bearish, so it kind of matches up. So, all right, that's interesting. So we can say, look, a lot of people are short here in the S&P. A lot of people are short on the euro here. Slightly more people are long US dollar JPY. Okay, so we could be any time of day, it could be any position. How do we use this information? How useful is it? Well, here it says signal bearish, here it's saying signal bullish, and I guess it's kind of saying, listen, a lot of people, it's how they've changed their perception as well, and we could go into how people change their perception, but let's keep it simple for now. What I think is the way of looking at it is, listen, if the majority of people are skewed in one direction, and they have been for a while, it's quite likely that that is overdone. If a lot of people have been bearish for a long time and they're positioned short, how many more sellers do you have to come in? And also, these are the guys that you think about how retail will trade. Retail will trade as, they will come out, if the market goes against them, they will be, they won't want to take any pain. And so when something is very, very skewed in one direction, I'm alerted to the fact that it could move sharply in the other direction, especially if it's been very, very bearish or very, very bullish for a reasonable period of time. You can kind of say to yourself, okay, well, if a lot of people are positioned in that way, the crowd generally is wrong when they're really extreme. So when everyone's really complacent, thinking this is the best thing in the world, it's really, really bullish, it's going to carry on forever, is often the time you're going to get a snapback and it's going to be going to catch a few people out. It'll make people a little bit more 50-50, and then it will kind of go in its own direction. It's just how the market works, guys. You think about supply and demand, there's been loads of demand coming in, unless there's a fresh flow of demand, especially for a stock. It's kind of, well, if there's no fresh flow of demand, everyone's bullish, you need that fresh flow of demand for people to keep buying, for the stock to keep going up. If you don't get it, it stalls and everyone's already long, and then it kind of flips the direction. That happens a lot more with smaller cap stuff than it does larger cap stuff, but the rule still applies. And so you can check out places like Stock Twits, you can check out places like dailyfx.com, and you can kind of put it into your decision making and say, hey, listen, I'm thinking of going short, but the whole crowd is going short. Do I need to be careful of that? How long have people been short? Not to say that they're going to be wrong, but just to say, okay, well, if everyone's thinking the same thing, maybe I should be a little bit of a contrarian here. We've come a long way. You kind of take all the different attributes and the different variables that you've got, and maybe you can add the sentiment of whatever you're trading into your decision making process, and maybe it's a filter. Maybe you say, listen, when it's really extreme, I'm careful I don't follow it. But when it's neutral, I kind of don't pay attention to it. So just some ideas on that. It'd be interesting to know what you think in the comments below, guys, about sentiment, or whether you take notice of it or not, whether you think there's any use or not, how you could potentially integrate into your trading would be interesting. Actually, interestingly, One final thing, there was a guy who ran a Twitter hedge fund. He's gone now, but he basically would analyze loads of tweets and he would make a sentiment analysis based on that, and then he would trade based on how people were perceiving it. And I think actually he was more a case of, as the sentiment was flowing to bullish, he would then go long on that, looking to ride that wave, as opposed to perhaps looking for the extremes and to flip vice versa. But I think that both are pretty interesting ways of approaching it. So that's sentiment, guys. Let me know your thoughts on that. If you've got any other sources as well for sentiment, would appreciate them. I know there's some out there, but it'd be interesting to see where you guys get your sentiment from. All right, guys, take care. Good trading. See you soon. Bye bye.